Good morning and welcome to the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. Here are the stories we're following today.
I'm Charlie Pellet. Doug Krisner has the week off. Asian markets are locked in on big tech this morning, following earnings from Microsoft, Meta, and Samsung. For more, we heard from Daniel Yu, head of global asset allocation at Yuanta Securities, and he spoke with Shirai and Heidi Stroud-Watts.
Obviously the global AI expansion theme is still a key one for you. It's getting quite clear who the winners and losers, those that are perhaps struggling to assert dominance are. How do you view the opportunities, particularly when it comes to the Asian names?
If you look at the global structure of this AI cycle, we can see that it is clearly the winners are the U.S. companies. As you know, the AI cycle, the infrastructure's build-up is mostly based on the data centers. And if you look at the level of data center capacities, I think that globally, probably more than 80% is all built in U.S. So I think we've got to think of in that terms. So if you look at Samsung Electronics, obviously having an association with NVIDIA and trying to ship out the chips, it's not really happening yet. As you know, the SK Hynix is probably having a market share of more than 80% of that business. Now, as you mentioned earlier, we look at the Micron, and Micron's competitiveness seems to be rising. So all that in terms of infrastructure-wise, it's all related to the data center. I think more importantly, though, however, we got to look at the software segment. In the past, when there was a internet cycle, you had a significant amount of the capacity increase in the infrastructure for the 5 years. And then software expansion was happening over the period of 15 years. But it seems like right now, the AI cycle-wise, the hardware as well as softwares are all start to kick in. If you look at the overall increase in the investment on the software side, U.S. is increasing by more than 11% this year. Clearly, the two-digit growth numbers are happening. So I think the speed of the penetration regarding the AI is going to be extremely high, but it seems that the speed of that is all focused in U.S. rather than any other country. So in terms of the Asian names, the relationship with the U.S. is the most important thing. So that's why if you look at the TSMC, they're doing great. SK Hynix, they're doing great, but Samsung Electronics is struggling. Some other companies are also struggling.
It's interesting you use words like essential, like paramount when it comes to these holdings, the big AI-related holdings in the US, right? For Mag 7 and adjacent stocks, does that mean that view is sort of Fed policy agnostic? Is it US election agnostic too?
Yeah, I think that, first of all, let's look at the interest rate front. If you think that the AI is going to accelerate very quickly, that reduces the risk of inflation pressure because the productivity goes up significantly. The inflation pressure comes from the demand side, where the investment as well as the demand on the consumer side accelerates due to the high salary increase. That's the inflation pressure. But if the GDP is growing on the basis of productivity improvement, the level of the inflation pressure goes down. That's what we saw in the internet cycle of early 90s to the late 90s. I think that if AI cycle continues to expand in U.S., we think that the pressure on the inflation will be reduced, and therefore Fed will be able to lower the interest rate as planned. So far they lowered by about 50 basis points. They are expected to lower by another 50 basis points by end of the year. Next year, another 50 to 75 basis points. I think that that's a very reasonable number to be expected. On top of that, I think that what we more worry about is that who becomes the president changes the perspective of the investment cycle. If the Trump gets into power, then we do expect he will raise the tariff by 100% and also lower the corporate tax rate by 6 percentage points. That changed the perspective of global market, and it really benefits the U.S. companies. So I think that will probably accelerate the process of inflation pressure, and therefore the lowering interest rate might be taking a bit slower pace or may not even happen. So we need to look at that and see what happens to
And Daniel, what about the currency transmission? Because if we do have a stronger U.S. dollar because of those calculations that you talk about, that will also mean potentially a weaker yen. And we know the Japanese companies, for example, have really benefited from that.
Right. I think that's basically the given, meaning that I think if you look at Korean won as well as Japanese yen, we do think that currently we have a lower interest rate environment. So therefore, we do expect the currencies to probably gradually depreciate rather than appreciate. So I think in terms of the price competitiveness, Japanese companies as well as Korean companies would probably able to increase that. However, though, if you look at the demand regards to the AI cycle, it's not the price only. It's the quality of things and how competitive are you in terms of the technology basis. So if the Samsung cannot be able to capture that market share because of the heating problem, that is an issue, right? So I think that we got to look at how things are play out. But I think as interest rate will remain fairly reasonably high in U.S. versus the Asian countries, we do think that the currency would probably gradually depreciate for the Korean won as well as Japanese yen continuously in the future.
What are the implications of that for central banks? We do have the Bank of Japan decision today, and what will be the transmission when it comes to the stock markets?
Well, I think that it would be tougher for them to lower interest rate in any case, if Japan or Korea. But whereas maybe raising interest rate, obviously Korea is at 2.75%, so they're not going to raise it, but probably would be tougher to lower interest rate. Whereas also if you look at Japan, interest rate still remains to be below 0.5. So I think that they will gradually raise interest rate, but I don't think that they can raise it further to beyond 1%. So that won't change too much in terms of the currency perspective. So in terms of Japanese yen, it's already depreciated from 140 to 153 or so. I think that will probably remain somewhere in a bound trading, somewhere between 145 to 155.
Now, watching Asian markets over the years, we have realized that any North Korea provocation, whether it's ballistic missiles, they don't necessarily tend to have a lasting impact. Not even defense stocks move these days. But in the broader geopolitical context, for example, what should we be on the watch out for in the coming months?
Well, clearly, if you remember, if the Trump comes into power, obviously he will start to talk again with Kim Jong-il of North Korea because they had that kind of peace treaty kind of thing. He met twice, right, during his terms. I think things can happen in that front. Also, if you look at the geopolitical issues in terms of Israel, if you look at the Trump perspective, is that he will probably end the war. That's what he's saying. But clearly, we are seeing that in terms of the oil price implication, we're not seeing the prices going up. Rather, it's actually settling down. So geopolitical risk, which affects the oil prices and inflation pressure, seems to be kind of dwindling down. So we think that right now the biggest tension is the geopolitical issues, but it's at a level of about 33% terror risk. We think that percentage is expected to go down as the presidential election finishes and going to the future. So I think that that's not going to be a major issue per se, rather than an issue, but I think it will probably gradually come down to affect positively on the equity market.
Daniel Yu, always good to have you with us, head of global asset allocation at Yuanta Securities.
I'm Charlie Pellet, filling in for Doug Krisner this week. We move next to Japan, where we'll get a decision later today from the Bank of Japan. For more, we heard from Sayuri Shirai, former BOJ board member and professor of economics at Keio University. And she spoke with Bloomberg's Sherry An and Heidi Stroud-Watts.
So if we're not expecting any change on the benchmark rate, what will you be watching?
I like to hear the view from governors, how he thinks about this excessively cheap yen. We started to have another cheap yen again. So he said, there is there is a time before they can consider another hike. But still, 153 is excessively cheap yen. So it's much cheaper than, in August. We had like 142, 143. So this is really having adverse impact on inflation, right? So,
which will really push up inflation, which will push up import costs, right?
So there's a contradiction here.
Especially since the July rate hike also happened because partly of a weaker yen.
I think mainly because of that. Of course, BOJ will not say that, but because they admitted that yen's depreciation is creating kind of bad cost-push inflation.
And the political picture right now with the ruling coalition losing its majority, that's actually weakened the yen even more. Will that have policy implications?
Yes, looks like it, because no political parties talked about this, excessively cheap yen and its impacting on inflation. Also, everybody talked about price hike, and so they have to give some subsidy through fiscal policy, but nobody really touched on this excessively cheap yen, right? So meaning that maybe BOJ will maintain this policy. So that's why that leads to the depreciation of yen at this stage, because the BOJ cannot take a countermeasure at this moment.
When it comes to wage growth, wages are growing, but real wage growth is starting to weaken, right? Do you think that we've gotten to a point where perhaps that could really stagnate? And where are we at with the virtuous cycle? Is there a big risk there?
So wages are growing at 2.8%, and it's not very bad. But because inflation is higher, and again getting higher because of the another yen's depreciation, so import prices are coming up. So in that sense, nobody really feel the real wages are growing. So that kind of situation is likely to continue. So people do not really see wages are going up, so they can consume more. That kind of virtuous cycle is not evident existence at this stage.
And you don't think increasing the minimum wage, which of course is being discussed from many sides politically, that's going to help? Is that just going to potentially force out a lot of the companies that are really struggling with inflationary pressures?
So all the political parties talked about increasing minimum wage as if it can be a solution for raising consumption. But the minimum wage is like a legal wage payment. And then, a lot of companies are struggling from cost-push inflation and additional, legally binding wage growth. Maybe many companies may not survive. So I just wonder, all these political parties, whether they really thought through, the very sluggish labor productivity growth, how can they increase minimum wage? And I don't think that will be a solution to increase consumption.
There's two arguments, it seems, right now with what's happening in the political instability here in Japan. Yes. One, if you have the yen weakening more, the BOJ might have to faster tighten policy. But at the same time, on the other side, if you have too many cooks in the kitchen, will Ishiba be able to actually allow the BOJ to do its job? Yeah.
So the difficulty is, Ishiba-san already said, Japan is still not out of deflation. This is a repetition since Abenomics, right? And actually, more than 2 years.
He sort of changed his tune after he was elected.
Yeah, he changed. So he said, okay, consumption is so weak, and he said at this stage, maintaining low interest rate should be, right? If he said that and he keeps saying that real consumption is so weak, how can he justify about this raising interest rate? So that makes the BOJ's decision very difficult.
How much is it also about the U.S. elections? There's a lot of arguments right now that a Trump victory would mean more yen weakness.
Yeah, I think BOJ is very much worried about the case of Mr. Trump is winning because it may lead to the dollar strength, higher interest rate, so it makes the Japanese yen much cheaper. So that makes their policy decision very, very difficult. So dilemma is getting bigger.
Do you expect to see more wage growth next year? The Labor Federation here has said they will ask for 5%. What is sort of the level that we need in order to get the sustainable growth?
So if we want to achieve 2% inflation and the real wage growth should be positive, then nominal wage growth should be 3%. Right? But right now, April to August, average inflation is at 2.9%. Right? It's good, but everybody really worked hard to raise wages. And then if you talk to a lot of small medium enterprises, a lot of companies say it's very difficult to continue simply because the economy is stagnant.
Right. So Shirai-san, after the shows, I'm actually headed to the BOJ, and we have investors trying to go through the statement. What should I be watching?
So, I really want to see whether maybe especially press conference, what Mr. Governor Ueda is going to talk about this excessively cheap Japanese yen, resurgence of Japanese cheap yen, I'm sure everybody asks, and then what the implication is a cost-push inflation. So is the BOJ is going to deal with that like they did in the past?
Sayuri, Shirai, good to have you with us, Professor of Economics at Keio University, with a preview of that BOJ decision to come later today.
This is Bloomberg Daybreak Asia, your morning brief on the stories making news from Hong Kong to Singapore and Wall Street. Look for us on your podcast feed every day on Apple, Spotify, and anywhere else you get your podcast. Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. Plus, listen coast to coast on the Bloomberg Business app, Sirius XM, the iHeartRadio app, and on Bloomberg.com. I'm Doug Krisner. Join us again tomorrow for all the news you need to start your day right here on Bloomberg Daybreak Asia.